So thank you for joining our webinar. Today we're showcasing our lease accounting solution for OneStream and exploring the lease accounting landscape for 2026. So if we look at the agenda, firstly, I'll give an introduction to our speaker, then we'll look at the lease accounting landscape for 2026 and dive into a demo of Concentric's lease disclosure management solution, also exploring some of the challenges with lease accounting and best practices for managing your lease disclosures in OneStream. So leading the demo today is Simon Bell. Simon is the Managing Director of CyBCS, which is the advisory arm of Concentric Solutions Group. He has more than 30 years in the EPM space and has been involved in lease accounting since 2018 in the run-up to the IFRS regulatory transition, where he supported organisations in configuring budgets under the new standard ahead of deployment into actuals. So in 2008, he founded OpenWave Solutions, which he built into a leading SAP-focused EPM consultancy, and continued to lead and advise the business following its acquisition by Sapphire Systems in 2023. During this time, he championed deployment of lease disclosure solutions in SAP BPC, including variants for Microsoft, NetWeaver, and BW4HANA, as well as SAC and also solutions for Fluence whilst at OpenWave. During his career, Simon has supported global organisations including IKEA, Sony PlayStation, AGCO, and Moët Hennessy in achieving their performance management goals. So today, Simon focuses on advising organisations across the UK, Europe, and the United States in transforming their finance operations with market-leading cloud platform solutions such as OneStream. So Simon, do you want to kick us off?
Yeah, thank you, Carrie. Good to see everyone today, and hopefully we've got some content. We'll be focusing predominantly on actually demonstration today, so that you'll get to see the software in action. But for those who joined the last webinar we did, we were introducing the accelerator solutions coming out of the Concentric Solution Factory, which are a group of rapid deployment capabilities spanning a range of topics that the business is starting to deploy to assist companies in effectively achieving greater objectives faster with OneStream. Today is spotlighting one of those solutions being the lease disclosure management solution. So this is a solution that we have just launched into a private preview phase, and that started at end of April, and we're now deploying it across organisations before making it generally available to any of our customers or any users of OneStream. But as Harry mentioned, I've been working with IFRS 16, ASC 842, and actually more recently FRS 102 in terms of supporting organisations in deploying the lease disclosure or addressing the lease disclosure challenges. And that's something which I got involved with as the standards were first being rolled out prior to transition in 2019. So it's been a bit of a journey. The challenges that people have faced in that time have changed. We've seen that the initial challenges were very much around not having data. And often people were looking for pieces of paper in different businesses to try and make head and tail of what they had. And of course, with transition back in 2019, there were some significant decisions to be made about how we adopt or how we do the first adoption of the lease disclosures. The world has moved on in that now the majority of organisations that we're dealing with have either deployed IFRS 16 historically, or in some cases are newcomers to lease disclosures if they're just local GAAP reporters and haven't reported under IFRS or US GAAP historically. So we're seeing a new generation of adoption in that sense. But actually, the majority of organisations we're starting to work with in the OneStream world are moving now from either a spreadsheet-based system or from another system. and that brings different sets of challenges. So, for example, how do we manage that reconciliation between a prior system and a system that is going to be generating logic results, for example, in a slightly different way? And we'll maybe talk a little bit about that as we go. If we can just jump to the next slide, please, Carrie. What we've got today to show is a solution that's based on a couple of simple principles, and that is that we want to make something easy for users to use, and therefore we're using a lot of capability that the users of OneStream will recognize in terms of workflow, and operating processes. And also adopting, where we can, master data, for example, that is already configured within the OneStream. So when we're looking at these things, it's about making something accessible, making it logical, making it usable for the business team members who aren't necessarily specialists in either leases nor in accounting. And we obviously are looking to take those challenges in some regards away. And as part of that, we do incorporate all the logic processes to take a stream of payments over a period of time to then perform all the necessary calculations to derive the liabilities, the right of use assets, the depreciation, interest, etc. And on top of that, also provide that ability to look forward in time to see what those results are in the future, so we can support things like forecasting. So we start with those sorts of principles, but we also have to address some of the more technical areas. So, for example, how do we manage a lease that may be deployed in one currency, but is not in the currency of the entity itself, as well as report up to three in currencies for the organization, to aggregate. And of course, when we think about the leases, we also need to think about how do we provide that information back for posting to GL, for example, as many people do need that data posting back into their ERP, or to their consolidation model in OneStream itself. So provision of that journaling capability, which is unique to every business, is incorporated in the process that we deploy. And of course, the important final stage is being able to see the data and interpret it, be able to audit it, and validate that whatever is going on is valid and rational, and our auditors and advisors can sign off on that with us. So, with that as an introduction, what I'll do is I will jump into a demonstration walkthrough of the system and allow everyone to see it. Okay, so what we're seeing here is what might be a quite familiar screen of OneStream with a set of workflows. We can see that in our workflows, we'll recognize that we may have multiple areas of responsibility, and therefore that kind of ability to navigate around workflows and obviously assign the responsibility for managing leases is accessible there to the users. I'm already in a workflow. It's June now. It's not actually June now, but I'm imagining it's June now. And what I can see here is that in my UK business, I have a number of leases, and I can see here just literally a register of the leases that I've got active. I can scroll forward to see the full list. This entity has approximately 30 or 40 leases on display here, and what it's showing me are only leases that are currently active. That is leases that haven't expired. When a lease expires, we would go backwards in time in prior periods to be able to see those. But once a lease is expired, it'll drop off this list so that we're not creating noise. But what we've got now is a list here of all the leases we've got in this particular entity. And I can see as I look across the page a variety of properties. So we can see these leases are validated. None of them need calculating. We do have a number that are deletable. So we do allow ourselves the ability to remove a lease so as long as it hasn't been reached the stage of going to journal. So we haven't posted that into ERP, and obviously that's tied into the workflow processes. Um, we also see a little bit of information starting here on the fact that some of these leases have been revised for one reason or another. So we can see there's a lease there that's had a rebate. We've got some leases where we've made some various adjustments for one reason or another, and we'll come back to those in a bit. Um, we can also see a variety of other properties, for instance, which asset classes these leases are in, the currencies of the leases themselves, and consequently any translation currencies that those leases have undergone for reporting. My group here is a GBP group, and therefore all leases will ultimately be translated into sterling. But this is a GBP entity, so there's no further translation here. And then we've got a variety of sets of information about when the lease starts, when it ends, the day of the month that the payments start on, and depending on the frequency of those payments, we'll see the the dates recur on that same pattern of days within the month. And then a variety of information about discount rates, the amounts of payments, increases that are routine increases, etc. And we can see then a variety of other bits of information that may be supporting information that we want to just store against our leases. But if I take a look maybe at some of the output reporting that we generate as a consequence, I can see I am in the UK and entity, so I do only see my UK leases, and selecting any of those leases allows me to see a variety of sets of reports. So I can see that we've got initially some payment information, but picking up on that, we can move to the asset tab, and in the asset tab we can see the life of this lease. It was added in January, and therefore we had an addition in January. We've got some lease cost that is calculated from the present value of the payments, running through then some depreciation and a net book value. And over time, we'll see that by the time we reach the end of that lease's life, it's fully depreciated with a book value of nil. And we may want to take a little bit of a closer look into some of these details. So I might look into the depreciation there, and it'll expand out so we can see the detail of the depreciation of that. And that becomes a little bit more interesting when we start looking at some of the aggregations, because then we'll be able to start to see the depreciation for all the assets that we're looking at in that grouping. But we can then scan across. We've obviously got the reporting there for the asset. We can also report on the liability, and the liability again derived from the same present value of future payments, but this time we can now see the regular payments being made against the lease. We can see interest calculated, and we do actually do interest calculations on a daily basis. So we end up with interest being charged for the period in a month before the payment, and an interest calculation being charged for the period after the payment is made. And the presumption is that the payment is made at the start of any business day, that payment is on. And that's an assumption in the system to enable that calculation to flow through. And our interest calculations are daily. So we talk about where we may see quite often a variance if we're moving from an Excel model that calculates interest on a monthly basis, for example, then we will see some deviation in the precision of those calculations as a consequence. And of course, the choice of date within the month of the payment, which will reflect the agreements we have with our lessors, would determine how that splits as well, and the consequent present value and consequential liability and asset valuations that we get from that. And of course, on any of these points, we are able to drill into any of these items simply by clicking on the item and opening up the subsidiary schedule. And we'll also notice that subsidiary schedule does give a split between what a revision may have had on it originally and what the updated position is as well. So where we've made revisions, we can also see that movement. And of course, at any point in time, those can be viewed. So we're seeing we've got all that data there. We can then start, if we want to get to a position of validation of the information we've got. We've got that present value breakdown. We can understand the actual present value of every single payment we've got in our profile. So we can validate and confirm with our auditors, for example, how that is determined. And ultimately we can get to a detail view, and within the detail view we can see, for example, all of our metrics together. Just check it differently. Some of those have gone in and not been fully calculated at some point. So we'll see that that at some stage we'll come back to that one. And then finally, we got the audit view there, which tells us the breakdown of all the things that have happened to a particular lease. So we can see over time that the lease was added, was varied, etc., so that we can confirm exactly why something's changed. So having looked at the reporting outputs, what we'll do now is just step through a typical process and understand how we actually manage and expose all of that information and see all of that information in the business. What I'll do is I'll just go to another entity that doesn't have quite so many leases in it, so that we can see just a little bit more clarity on when we're looking at things. And I've got here Norway, for example, that has fewer leases. But now we're also able to see that Norway can report, or Norwegian leases can be reporting in Norwegian kroner or in sterling, as each of these are translated into those currencies, the exchange rates that we've got set up in our exchange module. And again, we see that from a reporting perspective, all of those presentation views apply to our leases in Norway, just as they did in the UK, with the added factor that we can see that for the different currencies as well. And in fact, what we can now also just look at is not just the individual leases in Norway, but the aggregation of all of those leases in Norway over time. And again, from that perspective, being able to report in local or group currency gives us that ability to analyze and understand at the top level. And of course, now, because we're looking at an aggregate level, if I was, for example, to be looking at my right of use asset cost, and drill into that, when that opens up the detail view below, what we can now see is that that is showing me my assets or vehicles. What we'll do is we'll add a new asset that's not a vehicle, and that way we'll be able to see that we've got that split between our asset classes that may become visible. So what I'll do is I'll just jump over to the asset register, and clearly now in Norway, so fewer leases to see, because this has fewer in there and will therefore make clear. So if I add a new lease, one thing for ease of use, it does cache the data we've been playing with. So if we've started using some data, we can go away, we can come back later, we can finish something off if we haven't finished it, without having to retype things that we've already put in if we didn't, for example, have all the information. I am in Norway, so it's only going to allow me to enter this lease against Norway. And yeah, I'll make this office equipment. And I could choose sterling as my lease currency, or I could choose my Norwegian crowns or any other currency that we have had enabled within the system. So just stepping through some of this information. Every lease must have an ID, and that is not there is a system ID that the system generates, which is unique. We have a lease ID that we can nominate ourselves and therefore create for ourselves in the system that allows us to analyze and code, and therefore put in some kind of structure if we want for future reporting. We also have a description, more of a text description, which allows us to identify what type of lease we're looking at and the information that we might have against that. We have a free text ability to put in the lessor. We don't always necessarily want the leasing company as a dimension. We possibly do in some circumstances, but not everybody wants that. But we do provide that information because it is a useful bit of supporting information on a particular lease. And we do provide, for example, should we want to be able to allocate our leases to divisions or to another analysis dimension, we allow ourselves that ability to group and analyze our leases against another organizational structure. And that's been quite commonly used as organisations do want to potentially have their leases spread not just by legal entity but also by department, for example, and that can be inherited from our dimensions in our existing OneStream as well. Looking on beyond that, we may have an intercompany requirement. So if one of our entities has sublet an item to another entity, or we have a facilities entity that is providing services and leases to the rest of the organisation, we can organise an intercompany partnering scenario so we can have the leases declared correctly in both the leasing entity and the using entity, and of course that then, by flagging the intercompany partner, means that we can do the appropriate eliminations when we reach our consolidation system. So information only, but helpful as we move through those processes in our business. Additionally, one of the requirements of the standards is that if we've got a complex lease, we may need to analyse it between different classes of assets, and those different classes of assets may have different discount rates applied to them, may have different conditions, and therefore we should be able to allocate our leases to a single whole, and what we allow ourselves is any lease that has been created can be a master lease to which other leases are associated, and therefore we can group a complex lease into multiple subleases within the system, allowing ourselves to segregate by asset class, etc. Entity we obviously talked about, and that being controlled by our workflow that is determining when we are. So that gives us, again, some basic information, but we keep going. We allocate our lease to different asset classes. And what we can see here are we've got a number of asset classes which we recognise as standard. But beyond that, and this is where, again, some use cases and business use may differ between entities. We do also provide the facility, should we wish to record all leases, for example, including exempt leases. We can actually have some lease classifications that are exempt and therefore will not calculate for short-term or low value. And therefore those classifications, if we want them to be there, will allow us to enter leases that won't be classified or won't be subject to the logic and the calculations. We'll leave this on office equipment, and therefore we'll see that appearing in our reporting in a moment. We talked a little bit about currency, and that's a starting piece of information about our lease itself. What we then start to think about are all of those things that we need to assign against the lease. So we've got our currency, but importantly now we also need to specify the start date. I'm in June, so ideally our lease shouldn't start before June, because we would want all May leases assigned into the May period and the May workflow. So we'll just pick a date, and the importance of this date is that this will determine the first day of the calculation for the lease. So if we calculate forward from a mid-month or the end of the month, that determines when the lease actually begins, and therefore when it would be likely to end as well, almost certainly on an anniversary date, one day before this. So that gives us that actual calendar start date. And then beyond that, we'll start to move into our payment information. So again, in order to constrain our flow of regular payments, and we'll start off with some regular payments. In order to constrain that flow, we'll determine what is the end date of the lease, and if we're running this lease from the 1st of June, we'll probably run it to the 31st of May. In this case, I've got 2029 as the duration, but that again is a calendar, and that calendar can be expanded out to pick up multiple years into the future. And obviously then, as long as we want, these leases can span many years if we want them to. So maybe going into a slightly further in the future state for this particular lease, allowing us to create a fairly significant one. Our lease payment date determines which day of the month our leases get paid on. Quite often that will marry up with the lease start date. So the first payment will be due, or first regular payment will be due on the first day of the month, or the first day of the lease. So we quite often find that the lease payment date and the lease start date are the same. Although that does vary quite a lot, especially when we start looking at leases that aren't monthly. Maybe we're looking at quarterly leases, and our payment is at the end of the quarter, for example. So those payment dates could be somewhat in the future. And that allows us to, again, calculate and determine when a payment sits, which impacts present value of the calculations, as well as our consequential interest and asset valuation. So having got those bits of information, bit more information that we need, our discount rate, we can either enter a discount rate here and make it lease specific, or we can have a discount rate that is managed in the central settings, which is applied across the board, and therefore those rates will, if we don't put anything in here, the lease itself will inherit rates. And different organisations again have different policies or different requirements for applying a discount rate that maybe is set by group or is set by headquarters, and federated users don't necessarily know those rates, or don't need to know those rates, or don't control those rates, and therefore they're just imposed. But we may, for management purposes, want to override that with a manual input rate as well. So we allow that flexibility, to vary the discount rate or prepare the discount rate by entity and asset class, as well as directly onto the face of a lease if it's got a rate we particularly want. And then we define a regular payment. So here we've got a value specified, and that value will apply from payments, the first payment being 1st of June, running through to the last date within the payment sequence, which would be the 1st of May 2031. In fact, that lease in reality should end on the 31st of May, not the 1st of May. And that would impact the depreciation period as well. So obviously we do want to get those things right. So we've now got a regular payment stream running from the 1st of June 26 up until the last anniversary month, the value being on the 1st, which would be the 1st of May 2031. And then we start to think about, well, that may be on a different frequency. We may be doing payments every month, every quarter, every half year, annually, and we accommodate those alternate frequencies so that we can obviously deal with the terms associated with a specific lease. We do accommodate immediately things like residual values. So if we have, for example, a right to purchase an asset, we may assign a residual value that could be that, and allow us that ability to actually correctly then state the asset valuation as well as the depreciation. And of course, at that scenario, we would end up with some form of asset value at the end of the lease that is non-zero. And so on through another set of processes. We can index our payments. We maybe want to index a payment by a percentage, a 3% annual increase, for example, starting, and conveniently that is already on the 1st of June. So that would be the payment, the first payment from the 1st of June 27 onwards, and then in this case, 12 months after that, we'll apply an increase. And that gives me sufficient to get a lease configured with the payments associated with it, and therefore we can process that. But there are a couple of other things that we have options on. We must assign at least one standard. So in a typical scenario, we may be reporting under one standard, but we may have a requirement to report under multiple standards. And obviously that then, whilst from an initiation perspective, our lease calculations are going to do the same thing, does allow us to deviate when we get to revisions. So, for example, on a property lease with an annual rental increase under IFRS 16, if we've estimated the rental increase and it is not the same as the actual increase for CPI, for example, when we reach the point in time of the increase, that would trigger a revision. Under ASC 842 in the US GAAP, that would not trigger a revision. The initially determined estimate of the increase would be sufficient to justify not doing a revision. So depending on the standards, you can actually then end up with a divergence between the outputs that we would get. And therefore, we do support that ability to make revisions, or once we've set up a lease, make revisions under the standards differently for that individual lease. And that's now given us, again, the base information that we need. We could, for example, then have some additional information. We see we've got these attributes available to us. We can see here we've configured in this model the address, the registration number, serial number And we've only allocated these three to specific uses. We can allocate these on an application basis, and that will give meaning to additional information we may want to capture just as information for our business users. This doesn't do anything. We're not making this is not a lease management system, but what it does do is allows our users to just record a little bit of extra information should they wish to be able to uh, provide that little bit of extra management support. So what we've done is we've got here now a lease with that information we can use. One box we didn't reference was this finance lease box. Again, if we tick finance lease there, what this will do is it will remove this lease from the calculations, because it will become ineligible for the calculations. But we do allow that because, again, some organisations want to keep all of their leases under a single process and want to record all of their leases under, regardless of whether they're finance or operating. And therefore, we do, alongside that low value and low short-term lease exemption, we can have a finance lease exemption as well, again, which takes it out of the calculation processes. But now we've got that basic information in, we can save that, and that's now added this lease to our register. It's showing me that it hasn't been calculated yet. It does have a calculation requirement on it. So I'll just calculate that. And once that's calculated, which takes a few seconds, that now will become available to us in our reporting. So when we look into our reporting, we can see that asset. We can choose the currency under which we want to report it, whether that's our translated value or our base value. And the way it'll decide that is any currency of any entity in the hierarchy and any reporting currencies identified in the application configuration will be included in the translation automatically. And we can see that we started this lease in June, and therefore the calculations for our assets, costs, etc., depreciation, book value are displayed now in June. And we can see, because we did add a significant residual value on there, we can see that the book value of that lease at the end of the lease period remains that guaranteed valuation. So we can see that all those numbers remain consistent on the asset side of the calculation. Equally on the liability side of the calculation, we see again those exact same components, and obviously then that runs down over the life of the lease, and again the ability to evaluate that present value of the calculation, the detail information associated with calculations. I think I hadn't actually selected the currency to report in, so it didn't know what to show when I was looking at that report a little earlier, because I hadn't asked for the currency that we were looking at. So what we can see here is on the detail report, we can see that every single item within there. So from the perspective of our auditors, for example, we can look into any of these items. We can look into the detail of them, and ultimately, if we drill down to the base level there, we can actually see the individual explanation of the calculations in there. So even to the extent that we may want to validate what the system's doing for any particular calculation, all of these items then have that ability to drill down to the individual individual cell values from those aggregate totals and interpret the logic process being applied. Um, so so that has given us a run through the base use. Clearly, we've seen a lot of information about creating and configuring a lease. We also have that ability to revise a lease, and I'll just do a very quick revision. We may have a lease here. If I go into revise, what we allow ourselves to do under a revision, this lease originally started in January, so now I might want to revise it to, I may want to change the end date. I maybe want to extend it by a year, or maybe push that end date of the lease out by a year. We can change any combination of our variables in here, and therefore that will allow us to revalue and reclassify that lease. If we want, we can change the payment amount. We can see this is every 3 months. We can change any of these variables as we go, and then obviously, just for the benefit of our future self, as we come back to look at why we maybe changed the lease, we can give that descriptive piece. Didn't actually show the other payments. We could also be talking about, not on that one. We could also be talking about adding other payments in there to enable ourselves to deal with payment holidays, additional payments up front, additional payments at the end of the lease, etc. But as we save that revision, what we end up with is not that. So we'll skirt that one for now. But we would end up with, as we could see on, say, some of the already revised ones under UK, we would see that list of leases that have been changed and the reasons associated with those changes in those leases themselves on the register. Okay, so very conscious that we had a need to hold on to some questions. We've got a little over 10 minutes remaining for questions. So, Carrie, how are we doing?
Great, thank you, Simon. That was a really comprehensive demo. I think it was really interesting to see the solution in action. If anyone would like to book a one-to-one demo, I will put up some contact details at the end. But before we wrap up, we have had a couple of questions I can see. So the first one, what's the longest lease that the solution can support? Does it support really long leases, like 50 years plus?
Technically, there's no restriction. I imagine that there is a end of calendar life based on the technical database that underlies OneStream, which is obviously it's a SQL database, so there may well be a technical limitation in that sense. But no, there's no limitation in terms of OneStream and what we can do. Now that does raise an interesting point, because clearly something like, for example, working with very long leases, including ground rent, for example, that might have a phenomenally long lease. What we've seen in the past, because we don't particularly want reports running out for many tens, 50s, hundreds of years, we've seen a process whereby at a certain cut-off point in the future, all of the remaining balance of the payments out to infinity are just balanced up into a single net present value payment at that time, and that avoids us, we being just a little bit realistic. This system is not going to be used for the next 100 years, so do we really need reporting that goes beyond the next 100 years?
Great, thank you. Next question, does the solution support ROU asset impairment?
Yeah, so the right of use asset, the right of use asset is calculated from the payments. Within the other payment section, there's actually a classification for impairments, and whilst that's not strictly a payment, it's a transaction that we can classify as an entry, and that will immediately impact our book value, our asset valuation.
Brilliant, thank you. Next question, how many leases can it store?
Again, there's technically no limit. We've tested this up to multiple thousands of leases, and the performance is absolutely fine. You actually at a certain level you start to see the parallel processing kicking in on the OneStream service if we're using the OneStream cloud, for example. So depending on your scenario, the system will auto scale the resources allocated to calculations. So even if we're talking about very large databases, it'll cope. But in a lot of senses, it calculates when we create the leases, not each period. So it's not got any technical limitation on how many leases we can hold.
Okay, thank you. Another question. You said it was a standalone model, but if you already have OneStream for consolidation, can you add this alongside it?
Yes, yeah. So effectively, it sits as you can deploy this into any existing OneStream installation. So it doesn't impact or change anything in an existing environment. What it does do is it uses information. So we would nominate our entity dimension, for example, and use it. We can actually configure a standalone entity dimension as well that is just used for the lease register. But typically people do want to use their existing entity structures. But there's nothing in here that is dependent on, or there is nothing that a system must have already, or there is nothing in here that would impact an existing system to compromise it as it is standalone. But yes, it does import directly into a customer's environment, regardless of what has already been deployed.
Yeah, okay, understood. How easy is it to transition from previously calculating IFRS 16 from an Excel spreadsheet into the OneStream leases module?
Yeah, so this is obviously one of the challenges of a migration from one system to another. So the Excel is going to have calculated the present value, right of use asset valuations, the liabilities, the historic interest, historic depreciation. And that will have been done on the basis of however that maths has been defined in the Excel. So we would be recreating the leases, but because we are working on a daily interest basis, and obviously our months have a certain number of days in them, so we immediately know that in that example there will be some form of delta between the system. So we principally have a decision to make at deployment, which is what to do with the deltas between the way the system is calculating them and the previous system was calculating. And that may be some form of journal adjustment to true up, or other process. But that is one of those things that we need to agree with each customer as to how they want to handle that.
Okay, so someone's asked, would this be an additional cube?
This is actually a register-based solution. So it doesn't use a cube. It uses some content that is in, so for example, the discount rates do form a very tiny little additional cube, but it is because it's a register solution, it's basically sitting in that kind of sitting to the side of the cubes, allowing us to gather and report on the data in that part of the environment.
Okay, thank you. As I said, if you do have any questions or you want to have a one-to-one session, feel free to reach out directly on LinkedIn or by email. So thank you, Simon, for that session. I hope everyone found it really useful. So again, if you'd like to book a private demo of our solution, reach out and we'll get some time booked in the diary. If you'd like to talk to us in person, our consultants will be at OneStream's World Tour stop in London next week on Thursday, the 4th of June. So if you are attending, please do come and find us in the exhibition hall and we'll talk a bit more about the pre-packaged accelerator solutions for OneStream, which we've currently got available. Thank you for tuning in and I hope you all enjoy the rest of your day.